Welcome to Cryptomoonhuntrs, the only crypto podcast bringing you the latest projects across the industry. Cryptocurrencies discussed in this podcast are highly speculative and ultra high risk. Never invest more than you can comfortably afford to lose. Any information discussed in this podcast should not be considered financial advice and is provided for informational, educational, and entertainment purposes only. Seriously, these guys are idiots. And now here are your hosts, professionals of buying high and selling low.
Welcome to Crypto Moon Hunters. I am Hate Mail. With me today we have Loot.
Hey guys.
And this is our tax episode that we're giving you a whopping 14 days if you're in the US on taxes. This will be mostly...
Sorry about that.
If you're outside the US, this probably isn't going to be a good episode for you. However, a lot of the rules worldwide tend to follow the US, so it may be coming to you soon, if that's the case. Before we get
I know that I know Europe has like their own nuances or whatever, but to be honest, we don't live there. We know nothing about international tax structure. So
the only thing I will say about that is that there are some European countries. I know Portugal has extremely lax tax rules, like very attractive tax rules. So if you're a crypto gazillionaire listening to this, might be a good destination for you. And also there's a rule we'll get into later about Puerto Rico and their taxes. Before we get into the tax portion of the episode, I did want to mention we talked about briefly the executive order that Biden did issuing a commission for crypto. It sounded kind of favorable, then it kind of sounded unfavorable, but it does sound like at the end of 6 months, they basically want to have rules in place to regulate and tax crypto. It probably in the US, there's the midterms happening in November. They're probably going to have a change in party power, and then there'll probably be a lot of back and forth on that. So I doubt it will resolve, but I do think we need some regulation, and I won't be surprised to see if, we have some, as long as they do smart regulation. I don't have a lot of faith government in smart regulation typically, so I'll take that with a grain of salt, but
yeah, so my personal feeling on if anything's going to come out of that commission is I strongly feel, like you just said, that politically things are going to be different in possibly 6 months. No, not 6 months. Things are going to be different.
Yeah.
In the future, due to the political climate. It's just, I feel like you do. And once that happens, I think it's going to take a significant amount of time for regulation to come, because I think there's going to be a lot of arguing.
Yeah, there's going to be. And what's kind of funny about crypto and kind of unique to crypto is that there doesn't seem to be a party that prefers it. Like there isn't conservatives like it more or Democrats like it more. It's more, there's a few people in each party that are strong crypto supporters, especially the ones that are more technology savvy. And then there's
the less older people.
Yeah. I mean, there's a few exceptions, but
actually that's not even true, because I think Nancy Pelosi is a big crypto connoisseur.
I haven't heard that, actually.
No, I have.
So it does seem like
I think she buys a lot of crypto.
Yeah, I don't think she's a connoisseur as much as she owns a lot of Bitcoin. I think I read somewhere, but yeah, it's very.
Yeah, I probably choose the wrong word.
Yeah, I mean, there's the senator in Wyoming. She's a Republican. She's super crypto savvy. She's actually one of the more intelligent crypto people. And Ted Cruz, of all people, I would never expected him to be a crypto advocate and deeply knowledgeable. And then there's quite a few out there. So yeah, there's going to be all kinds of stuff coming down the pike. I think it's funny though. I was listening to a few different and talked to a CPA for a long time. He's very crypto savvy about for this episode, and his opinion, and I agree with it a lot, is that the reason you're seeing this commission go into place and the reason it's moving fast is that the U.S. wants to do their own central bank digital currency.
Very possible.
They've even outright stated that's what they want. They want to have one. China's making their own, which should go online sooner than later. one of the theories behind this that I think makes a lot of sense is that with inflation the way it is and the way the US dollar is losing value and, just currencies around the world have been kind of mismanaged and used just terribly. If they created a new CBDC for the US, you could kind of basically have a new currency that wouldn't be as inflated. So it's kind of a way to reset. I don't have any faith in government spending responsibly with the new CBDC. But there may be restrictions on how they release more. So it wouldn't be basically like a shitcoin.
So it wouldn't be diluted.
Yeah. So, I mean, that's an interesting theory. And I could definitely see that because the theory is that they may not peg it to the US dollar. If they don't peg it to the US dollar, that's definitely the intent. If it's pegged to the US dollar, then, not going to matter. But it's an interesting theory anyway.
Yeah, no, it is.
So the CBDC could be the new world reserve currency. Who knows? But so with that, let's get into the tax episode. Lude, I know you're working on your taxes currently. You had asked me an interesting question offline.
But I did, just for all purposes, I didn't do DeFi taxing yet. I've only looked at my centralized exchange taxes. And my question for you is, is it possible, or what would the benefit of showing a $98,000 loss be?
Well, I will say that your crypto taxes, that the $98,000 loss, I'm guessing they're showing it based on the money you're moving off crypto.com to the exchange,
right, exactly.
to DeFi. So that $98,000 loss would actually probably get you, if you got audited, you will probably get charged with tax evasion.
Ouch.
So you may not want to do that. And real quick, we are not tax professionals, so take everything we say with a grain of salt, not financial advice, blah, blah, blah. But yeah. Now, there is a couple interesting things I've learned. First, let me just go through what is taxable on crypto. And
all right, let's hear it. Let's do it.
So the main things, buying crypto with cash, holding it, you're fine. And this is from a variety of websites. Coinbase has a good tax article. There's a lot of different tax companies that have them. You can receive crypto as a gift, just like you can receive money as a gift. You can give crypto gifts. It follows the same rules that normal cash has, which is you can donate up to $15,000, and you can transfer wallet to wallet with no problem. So that's not an issue at all.
Wait. So stop there. So you just said you can transfer wallet to wallet. If you declare it as a gift, the maximum you can move is $15K.
Yeah, and that's the same way with cash. So you can give a relative $15,000 cash, and it's not considered a taxable event, or a friend or whoever. And then the interesting.
Now, is that per year, or is that in one single transaction?
I believe it's per year, but don't quote me on that. But I don't know that for sure. But I know you can. And that works that kind of way with cash. It's one of those things. If it's a family member or relative, it's a little easier to do more, and nobody's really going to say anything. But if you get audited, just remember that they're going to look at every transaction, and if they see a $15,000 exchange of hands, then you can say, "Hey, it was a one-time gift." But if they go to that person and that person says, "Hey, I sold them a good," then you can be charged with tax evasion.
Okay.
And then the other interesting thing about transferring crypto to yourself is that how do they know it's your wallet? That's kind of the crux of a lot of this, and we'll get to that later. But this is.
Yeah, I mean, it's not having a real owner, right?
But
because it's not KYC.
For the all intents and purposes on this, let's just assume we're using centralized exchanges like crypto.com, Coinbase, Kraken, etc. So say you were transferring from crypto.com to Coinbase, that's fine. There's no reporting required for that. Now, where you do get charged, and this works like stocks and bonds, is if you sell crypto for cash, that's a taxable event. If you sell at a loss, you can deduct that loss on your taxes, but if you sell at a gain, that's taxable. I think everybody feels fine about that one. That's kind of a normal event to happen where you're expecting to get taxed. Where an area that I don't agree with, and I think a lot of people don't agree with, is when you convert one crypto to another cryptocurrency, that's where you do get charged as well.
Yeah, I think that's just, it's not a good thing. But
no, so an example is if you use Bitcoin and you buy Ethereum, if you made money on that, if you originally purchased the Bitcoin at 30,000, and then you bought Ethereum with Bitcoin when Bitcoin's worth 45,000, you're going to have a $15,000 taxable event because you made that.
Which is a lot.
Yeah, it's a whole lot. The other thing is if, and not a lot of people do this at this point, but it's becoming more prevalent. If you use Bitcoin to buy goods or service, you pay for a taxi with Bitcoin, then if you made money off that sale to do the conversion, that's another taxable event.
Okay, so let's go in the terms of spending crypto. Let's stay on this track for a second. So I want to throw a scenario at you.
Okay.
So I use a crypto.com Visa card. Okay.
Yep.
Let's just say I put $5,000 into the crypto.com Visa card.
With a coin.
And just remember, with any coin, with Bitcoin. So I took $5,000 worth of Bitcoin, I put it onto my crypto.com Visa card, and then I take that card and I buy $5,000 worth of groceries. What am I in for taxes?
So,
because I think this scenario is typical. I think a lot of people that I know personally do what I just said. So what would happen there?
So that's where it gets ultra confusing. And it depends on the card. So when you load those funds, are they converting the Bitcoin at that point, freezing it at the value?
No. So the crypto.com does something even more weird. You put it onto the card, so it takes your Bitcoin and it freezes it, right? You can't access it. The only way you can access it by spending it, and it doesn't actually do the conversion until you do spend it, and it gets converted to USDC.
Okay, so that's where it's going to make it extra confusing.
At time of purchase.
That's where it's going to make it extra confusing because your taxable event happens at time of purchase, assuming they don't freeze the dollar amount of the Bitcoin. So if the Bitcoin's worth 45,000, say you bought the Bitcoin originally at 30,000 again, the Bitcoin's worth 45,000 when you buy the pizza or the grocery or whatever you're buying, that portion is taxed at the gains of the difference. And then if, say, a week later you go and buy something else with that $5,000 and Bitcoin has gained or lost value, your taxable event is the difference between them again.
That's very complicated.
I don't understand how anyone's really going to
I think what crypto.com does, and I'm just using them as an example because they're super popular. I know the more people that I personally know use the crypto.com Visa card than the Coinbase Visa card. So that's why, and I don't have experience using the Coinbase Visa card, so that's why I'm only talking about the CDC Visa. So what it does, at least to what I can tell, is it takes the 5,000 and it locks it in at 5,000. Because if you were to go into your balance, it never changes. It doesn't fluctuate once it gets topped off. So if you take that 5K in Bitcoin and you put it on the Visa card, it locks it in at $5,000. But it does sell it to USDC at time of purchase.
Okay, so they may be It sounds like it's frozen at that point at that dollar amount. So
Yes, it does. It has to freeze it because the amount that I have in my balance does not go up or down. It stays at whatever the balance is.
it almost sounds like
It never
it
fluctuates.
almost sounds like they basically sell it to themselves and hold it there at that value. So that way, for tax purposes, you don't have to worry about every single transaction. I could be wrong, but that's what it sounds like to me.
So it sounds like they do it a very user-friendly way.
Yeah.
Okay.
That's what it sounds like.
Now, I can't speak about Coinbase because I haven't tried it. I do have their card. I'll be honest with you, I didn't love using the Crypto.com Visa card. It just wasn't as easy to use as I thought it was going to be. There was a lot of limitations. So for now on, personally, instead of doing that methodology, if I want to take $5,000 and put it into anything, I'm just going to transfer it. I'm going to do the conversion that day, and I'm going to throw it into my checking account for real.
Yeah, it's the crypto cards right now are a little clunky, and the rules, the way they're written today, do not make you want to use crypto because the taxing is so complex.
It is very complicated, and there's also a lot of like nuances, and there are limitations and weird rules when it comes to the crypto debit cards.
Yeah.
In just using it, like the usability is less than a regular debit card.
Yeah, and I'm a type of person, I like to just pay for everything on a credit card and then pay that off every month.
Me too.
So I actually use a card that pays me in Bitcoin rewards, which I like. So I feel like I'm just kind of getting the best of both worlds. A lot of
Just for curiosity, which card is that?
that is, and this is not a paid endorsement, but that is BlockFi's credit card.
BlockFi. Does it cost money to use the card?
No, it's just a regular credit card that pays 1.5% in Bitcoin. Now I know there's cards out there that pay like 2%. Or have better points programs. But I figure since you don't get charged fees for buying the Bitcoin and transferring it to your wallet or anything, I feel like it kind of maths out in your favor.
Oh, cool. All right, let's move on then, because this is not a credit card or debit card episode.
So the next section is, and these were kind of the taxable as capital gains things that we were talking about. Now, you can also be taxed as income on crypto for a lot of things that you would never suspect. So,
okay, let's hear about it.
First one, easy one. This one makes sense to you. If you work for an employer that pays you in crypto, you're going to get taxed on the income. Makes sense. Everybody kind of assumes that would be.
So wait, just stop there. Do you get taxed more because it's crypto?
No, it would be your normal income tax amount that you would earn.
But do you have to pay twice? And what I mean by that is you get taxed, you get normal income taxed, and then when you use the crypto, you get taxed again.
Well, you get taxed on the capital gains. So technically it could be. The answer is yes. And that's where if crypto goes up in value, then you could get taxed on the capital gains for using it. So the dollar doesn't change value in the US. I mean, it changes value in the world, but it doesn't technically change value in the US. So you don't have to worry about the capital gains on it. But with crypto, it'd be like getting paid in stock. You're going to get income tax on that stock.
Right.
And then you get taxed for selling it. So it's same concept there. The other thing you can get taxed on is getting crypto in exchange for goods or services. Same type of thing. If you're trading, if you have, let's just say you have a vehicle and somebody's paying you in crypto, same type of thing. You got to claim that as income. The other one that I think surprises a lot of people, and a lot of people I'm sure haven't paid taxes on this, if you do crypto mining, your mined crypto is income.
Okay.
So, like, for example, I have an app that I mine. It's called PiCoin, which actually my dad told me about, and you mine it every day on your phone. And actually seems like it's going to be a pretty good coin. That's one I want to do an episode on eventually. I didn't think it was anything, and then as it's growing, it's...
You mine it on your phone.
Yeah, it costs 0 energy to mine. They have an interesting system, and it seems like it's going to be a legit coin. There's 22 million people mining it, so... And
I think I'm gonna start mining it after you tell me how to.
Yeah, I'll send you the link. Anyway, it doesn't have a value yet because it's not publicly traded, but technically I'm supposed to be paying taxes on it, but I don't know how to pay taxes on it. There's no reports for paying taxes on it, so that's a whole confusing area. But if you mine a popular coin like Bitcoin that has a stated value, you're gonna have to... That's income. The next one is, and this one's so complex and so difficult, is, okay, you got your Bitcoin out there, or your whatever coin you have, your favorite coin, and you're getting staking rewards. Those staking rewards are treated like mining proceeds. They're taxed based on the value when you receive them.
Now, is that also reflection?
Reflections and staking are the same thing.
Okay. So for all the folks that are in those reflection coins, you just heard your reflections are taxable.
Yes, that is income. Taxable income.
Okay.
So it's crazy, and I don't even know how you're gonna receive that. Even such as, say you get crypto, say you have a coin that you own, and they do a hard fork, and then they pay you out in a different amount of crypto. Basically, any crypto you receive for any reason. Even getting airdrops is technically a taxable income tax event.
Even if you don't want it.
Yeah, even if you don't want it. It's technically, if it has value, that's income.
Oh, wow. So, like, the crypto that gets airdropped to my wallet that says it's worth like $10 million, even though we know it's a scam.
Well, yeah.
Like, what about that?
So that is more complex, and let's hold that question because I have some comments on that. Because I asked some of these similar questions to the CPA, but it gets into a whole nother topic we'll get into in a minute. And then, so that portion of it, basically any crypto you receive can be income, and anytime you do a taxable event, which is trading coins, selling coins, or using coins to purchase goods or services, spending coins, is all taxable. So you can get taxed to oblivion with crypto. The only real...
That's lovely.
Yeah, the only real way to avoid the taxes, and it's kind of easy, you get rug pulled. And you have a coin that you're going to swap out or trade. The only part is, and this is a question I forgot to ask, and I really don't know the answer to, is if you get rug pulled, your coin becomes worthless, but you don't have the ability to sell it.
You can't sell it if you get rug.
Yeah, you can't sell it, you can't trade it, you can't do anything with it.
It would have to be a loss.
But it's technically not a loss on paper. And then the other question, kind of in the same vein, is NFTs.
So, all the rugs that happened to you and I over the last year in 2021.
Well, some of them you can sell, you just sell them for nothing.
Yeah, but some of them, it's a honeypot, so you can't actually sell it.
Yeah. So,
like, you take the taxes, you just can't sell it. It doesn't let you.
No, and that's a part of crypto that there is no answer to, and even very bright people, because I did a little research on it, there isn't a way to report that today. That's probably going to be part of regulation, something that you can list.
Yeah, and just so that the listener base knows this, a lot of people will disagree with me, but I myself am an advocate of crypto reform in the United States.
Yeah, and I think there does need to be a little bit. I mean, we need clear...
The amount of money that I have lost over the year is disgusting, and I have no protection from that.
Now, there is a lawsuit happening right now. It's done by Tezos. If you've heard of Tezos, it's a crypto company that's pretty popular. one of the executives who's very, very wealthy sued based on a sale he had for $4,000 for crypto. He'd earned $4,000, I think, in reflections. I don't remember the exact details. It was a small amount, but in $4,000 to this gentleman is absolutely nothing. But he brought the lawsuit just so that the IRS and the court would be forced to hear the case, because it doesn't make sense that you earned $4,000 from staking and you have to pay taxes on it because those are unrealized gains. So
that's true.
So when he brought an army of lawyers in, the IRS said, "Hey, we'll just pay you the $4,000." They tried to just settle it to get it thrown out. Well, he refused to take the $4,000 because he wants it to go to court, because if the judge, and it's a federal judge, rules on it, that will have a cascading effect, because they'll use...
He wants meaningful change.
He wants meaningful change. It sets precedent. So that case probably won't get resolved till close to the end of this year. And that brings to my next topic. Now, note, I am not advocating for this. I'm not a tax advisor, but speaking to a CPA, his personal opinion is that on DeFi, because when you're on Coinbase and you're on crypto.com, they're going to send you a 1099 form. Crypto.com is a little weirder. I'm still kind of...
Oh, no. It's very easy to use. I can help you. I did mine. It was extremely painful to see the results, but I did do mine.
I did do that and downloaded it, but I don't agree with the report and the outcome. So...
Oh, okay. Well, that's different.
Because I only want on there, and the only thing I feel that you should report on crypto.com would be your interest that you've earned from staking and your
sells
and your buys and sells. If you have, if you've gained or lost. But it also counting money transferred to DeFi, etc. And
so money transfers to DeFi, it considers that a loss,
and it shouldn't. That you don't want to,
right? But their application does.
Correct. So then that gets into,
which is why I said loss, but earlier in the conversation.
So then you get into DeFi, and DeFi is so complex and so confusing. Now there are sites out there like Coinly. There's a lot of crypto tax websites that you can plug in your chain, and then it will figure out all of your transactions and tell you what you should or should not owe. However, and I thought this was a good idea. I was going to purchase one of them. It was $200. I was going to send a report to my CPA. However, I learned, and I was pointed to a website called cryptotaxaudit.com, which they're like one of the most renowned crypto tax experts. If you're a multi-gazillionaire crypto purchaser and you get audited by the IRS and you want legal defense for crypto, they're the guys you go to. And they've become pretty well-rounded. Well, according to them, 9 out of 10 of the sites tell you something different when you go on to all these different sites. They will all give you huge differences. So you plug in your DeFi, and according to them, the IRS says you owe $1 million, and then the next site will tell you owe $9 million.
Well, that's not good.
Well, and then and this is how they win a lot of their cases, is they put the burden of proof on the IRS and say, okay, well, this site says we owe this site says they owe this, and then 2 months later, the same site says they owe something completely different. Which is it? And then the IRS can't usually give a straight answer. So this CPA's opinion is, for DeFi, I wouldn't even worry about it. Trading.
What does that mean?
He's saying
I wouldn't.
He says I wouldn't even file taxes for it. Worst case scenario, you owe 9% on any crypto gains you had over that period.
Really?
Because it's too hard to report. Like, there's just
99% of my personal wealth in the crypto world is in DeFi.
Right. And then his thought is the only time you should be reporting it is when you're realizing gains. And realizing gains mean you're moving it off DeFi to an exchange and selling it for cash.
Yeah, I mean that would be perfect. I mean, you have to off ramp it somewhere, right? That's when that's when I expect to pay taxes.
And that's what the Tezo case most likely will lead to. Now, that is, you are risking penalties and a 9% cost on, depending on your income level. You and I don't think have enough money for us to be too worried about it. We won't get hit too hard. But it's just, It's not possible to really do. There's no clear rules. There isn't any clear software that works perfectly with confidence. So I think that's probably the way to go. That's what I'm probably going to do, is just report all of my centralized exchange activity and then see what happens. And if I owe money next year and I have to have my taxes amended, I'd rather do that than pay them too much this year and then try to get money back from the IRS. So I don't know if any of you have ever tried to get money back from the IRS, but when they owe you money, it's very hard to get. They'll always take your money.
So I was actually not thinking of reporting my crypto this year because, first of all, the centralized exchanges, they do the report for you, don't they?
Well, all of them at crypto.com. If you bought on Robinhood, or you bought on what was the other ones? Coinbase, they do a 1099-K form, and it's really simple and easy. You just send that form in to your CPA.
Right.
The crypto.com's a little more confusing.
Which reminds me to upload those two documents.
Yeah, the crypto.com one, they said they sent 1099s. I got one, and it said it no longer is valid, which was confusing. But, that's crypto.com. I'm sure many of you use a lot of different ones. If you're using DeFi, you can try to use one of the many different crypto tax softwares. Just note that they're all mostly different, and most of them are probably not super accurate. So, you might want to test a couple of them and see. Maybe go with the lowest one. That's what I would probably do. But, there's not a lot of CPAs out there that are very crypto savvy. So you're gonna have to really hunt for one if you do a lot in crypto. If your crypto transactions are pretty limited, I wouldn't be too concerned. Just send your Coinbase report in and call it a day. But if you're a heavy DeFi user, you may just want to wait till next year. Now, in 2023, it's a felony not to report your crypto taxes, so be very careful. But I think for the remainder of this year, I want to see kind of how the rules take shape personally.
Yeah, I think I'm going to avoid it until next year. And plus, I've already looked at my statements. It's heavy losses. I mean, there's no money to be made there.
Yeah. And if you lose money, it may help you on your taxes. So you may be more, if you've lost horribly, especially in DeFi, it may behoove you to report that, because you may owe less. I'm going to owe a ton of money this year, so I'm hoping crypto might actually help.
Yeah, no, I didn't make any money on real exchanges, and any money that I did make isn't realized.
Exactly. That's kind of how mine is too. So
it's all just there. I mean, it's all in different DeFi wallets, and I did really well in some areas. I didn't do so well in others, and overall, actually, I think I'm either even this year, in actualities, I'm either even or ahead. But on paper, if you go by what crypto.com says, I'm a massive loss.
Yeah, but I wouldn't. I would redo that report and filter out your transfers to exchanges as a loss.
Yeah, I will do that.
Because you don't want to get hit with tax evasion. And then also, if you're doing the report, you want to use and my preference anyway for crypto reporting would be use the highest in, first out cost basis.
Wait, what does that mean?
So there's a couple different ways you can use a couple different versions of report for your gain loss report. So
yeah, I saw that, and I didn't understand what it meant.
I have to pull it back up to remember what all the choices were, but most people recommend using highest in, first out, and that means the highest transaction in, first out is what they look at first when they look at how you're reported. It makes it simpler.
Highest in, first out. Okay. I'll remember
And
that.
I'm sure if you're a tax person listening to this and want to tell us how terrible we did on this, let us know. You're welcome to join us on the show. But that's what all of our research has come to.
We're not experts.
We're not tax people. Next year, my goal is early in the year to have a CPA on the podcast to discuss this.
I think that would be very beneficial.
Yeah, I think that could be very beneficial to both us and other people. Another thing to mention on NFTs. NFTs are technically reportable, but nobody knows how to tax them.
So NFTs, just so that we're clear, there's a lot of different types of NFTs.
I said the way the tax software looks at it is they look at it just as a blockchain transaction. They can't differentiate that it's an NFT or not.
Then that makes sense. But some NFTs are used for staking, and some NFTs are just straight up artwork, and some NFTs are in-game items. So, I mean, there's so many different types of NFTs that I think there needs to be more actual definition around them for them to be meaningful.
What a CPA recommended on a different podcast I listened to when they were talking about NFTs was to handwrite on paper all your NFT transactions, buys and sells, because that's the only way to prove that you bought and sold it on DeFi. And if you ever get in trouble for not reporting large gains in NFTs, that ledger, when it's handwritten, is considered much more, it's stronger in law than if you were to just store it on your computer. Which I know sounds crazy.
Really?
Yeah.
Like on an actual pen to paper scenario.
Yep.
You heard it, folks. Buy some pens.
Just like, how old school is this? But
What's what I just heard. Yeah. Buy some pens and notebooks.
So taxes in crypto is just unbelievably complex, and the government really needs, I mean, as much as I hate regulation, this needs to be figured out because it's the Wild West with the IRS. You know, they don't know. They barely know taxes. They're understanding crypto is going to be even worse. And yeah, it's that most of the CPAs don't know. It's a mess.
That's fun.
Any other things you want to cover real quick before we wrap it up?
No, I mean, I think we covered it all, right? Centralized exchange we talked about DeFi. I mean, I think that covers most of it. And you even talked about getting paid in crypto for income. So I think we're done.
All right. Well, thanks for listening, everyone. Next week, we have a really good guest from a crypto game company. It's kind of like a crypto game platform. So we will see you next time. Thanks for listening.
Thank you for listening to this episode of Crypto Moonhunters. If you like the show, consider becoming a Patreon and get special perks. Just go to patreon.com/cryptomoonhunters. You can also tip your host by donating to our wallets. Just see the address in the show notes. Please be sure to like, subscribe, and leave comments on whatever platform you listen to.